The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. On this 10th day of August, my pleasure to be here. Tiger Technicians Hour. I'll take calls from about 12:30, about another 25, 30 minutes. There is a ton that I want to do right now. In the Chapman wave technique of looking at a pattern that I call the Chapman wave falling axe, that's declining highs and sharply declining lows until it turns around and makes a kind of a V or a U shape, there's a chance that you can go one-to-one to the upside. When that one-to-one to the upside is done, and if it closes above the previous high, you have to be careful. But as soon as it goes sharply lower below that left side lip, other things can happen. So at peak D, back on the 26th of July, the very next day, what was leg D, the very next day, the 27th, we went short the Dow after the 25,587 high is the daily chart. It pulls back, it makes that pattern, it pulls it back quite sharply, actually, not very sharply, but quite sharply to 25,120, 440 points, about just under, what is that? Yeah. So, and then it rallies. So, it kept that short. We did add another short, heavier short position, which got stopped out. But the moment it made that leg E at 25,692 on the 7th of August, I said, look, everything about this doesn't look like a brand new leg A. It doesn't look like it's recycled. The MACD is starting to decline in terms of the histogram. That's the vertical line above or below the 0% line. And the stochastic didn't even get close to the high that was made back when it made the high on the 26th of July. So we went short. We added to the short position. One is a short position where you can go short by going long a particular ETF, the DOG, that is one-to-one short, already short. All you do is you buy it. You don't have to worry about being short and getting a margin call because it gaps up or whatever it is. You short, it's done. You put in a stop, that case closed. Every time this particular index goes down, your index goes up. And then for other subscribers who are not, they have no problem, qualms about going short, we went short the very next day at 25,570, I believe it was. Yep, 20,570. We're trading right now at 25,328, down 180 points. So I wanted to get this out the way to say that in the daily chart, and I'm going to go through these now. Today's a different day to any other days. Technical Friday. I want to just free think. I want to just move around the way I would normally do it when I'm just looking at charts after the market closes through the evening, early in the morning. I spend a lot of time on my work, a lot of time developing the techniques, the plethora of techniques that we use. One, of course, is the notation that goes back to late 1970s, early 1980s, where I started actually counting waves. All right. Now, and having been born in Cape Town, South Africa, you can understand why I count the waves. All right. We're looking at the green line here, the 9-period moving average of 25,437. We're way below that now at 25,327. We're actually way below the black line, which is the 14-period moving average. You've seen an evolving here amongst certain technical analysts where they're using the green line when it crosses a certain way, and it changes to red. This is something that I've done for years and years and years, and I find it really helps because you're using just one line to give you a whole bunch of indicators. So that's a nice technique to use. And now what we're looking at is that the MACD has just crossed. The day is young. Still got another many hours to go till 4 o'clock. But the MACD has crossed negative for the very first time since it broke above back on the 7th or 8th of, on the 10th of July. That's when the MACD crossed positive. Stochastic had already given a signal. Now, stochastic's at 79%. It's just under 80%. At 80% or higher, I like that. Aye, aye, aye. I got to figure out what's going on with my throat. The way it starts to get scratchy. All right, I'm back. So the unbalanced volume is reversed sharply down, and that's saying be real careful here. Now, keep your eye on the left side chart. As I'm saying on the right chart, we've gone leg E within that rectangle. We've gone through the second iteration of the arch that makes a lowercase h to a lowercase m in the weekly chart. MACD is still good. Stochastic still very good at 80%. Now, keep your eye on the left side chart. That's the Dow. Here we go. 2837.96 down 15 on the S&P. And what I'd said is that there's a good chance that this F/B will turn into a B if there's a close below the 9-period moving average, especially if the 14-period moving average gets tackled. Both of those have happened. 2840 is the 9-period moving average in the S&P cash index, S&P 500. The 2833 level is the 14-period moving average. We went to 2831.69 on the S&P. It's trading right now in the middle of these two moving averages. The MACD is just about to cross negative. In fact, it's at 0. That is really unusual. So the histogram hasn't yet crossed negative from the 0% line, and the stochastic is still at 87%, which is very good. Keep your eye on this one. Just a real quick look at the middle one, which is the weekly leg E under the previous all-time high of 2872 on the 26th of January. And the weekly chart is still very good, making that H pattern. But most importantly, you see the rectangle formation in the Chapman wave methodology, that flagpole, when there's a sharp pullback and then a rally, that rally can always go in a shorter time frame. Look at the weekly chart, a monthly chart. Now look at the weekly, to at least a D or an E, and that can go right on, or just above the previous all-time high that we're looking at, in this case, 2872s. And we've gone to the 28, I thought I'd written that in, 2863.43. Let me do that right now, 2863.42. I think that was on the, I'll call it the 27th. I'll change it if I'm wrong. Make it 2018, not 19. And we're looking at this with the potential of changing to red and changing to a down arrow with a peak F, not a B, but an F, if by Monday or Tuesday, there's a decisive close in the 2829 or lower area. That'll take the MACD decisively lower, and the stochastic will get to about 83%. Really needs to get to 80% or lower to be able to put a down arrow with a sell signal to sell mode. Meantime, not even a sell signal yet, almost like a gap island reversal. Okay, keep your eye on the left side chart, the daily chart, going to the Qs. Why? Because the QQQ failed at 182.63. It failed by, amazing, 31 cents to take out the July 23rd all-time high of 182.93. And we haven't yet got even a signal to confirm that there's a continuation of the down arrow down mode. And I'll talk about that as soon as we get back. But it looks like a peak D in the weekly chart, leg E in the monthly. QQQ, let's go. Trust series down $5 at 180.86. Basil Chapman, Tiger Power. I'll be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. I had a quick question, which I'll deal with right now. The RTYU18, this is the Russell 2000 Mini, had a beautiful low made early this morning when everything looked so negative. It hit the 1681-ish area, started a rally, retested successfully at the 1680 level, and then started a brand new move. And now it's just gone to a peak E in the 5-minute, peak E in the 10-minute, and a peak D was made in the 2-minute. And the ESU 18, let me just look at that, is rebounding, but this is not anywhere as strong as the Russell 2000. And that's going to lead me, the reason why I wanted to take this time, it's going to lead me to the next segment. So here we go. So keep your eye on the left side chart. The left side chart says that the NASDAQ is holding extremely well, down 0.54%, Dow's down 0.68%, S&P's down 0.53%. So it's kind of in line with the others. But look where it's coming from, almost an all-time high. Even now at 189, it's what, 2 points off the all-time high? Not bad action at all. And the MACD and the weekly, the MACD and stochastic and the daily charts are starting to weaken, but the weekly chart is holding pretty well, but not anywhere as good as it was in that whole cluster formation back in March when it went to 175.21 before dropping to 153 very sharply. So, okay, I got that out the way, and I'm saying to you, there's still a divergence, and that's really what I want to talk to you about in this moment. I had a question about the VIX index earlier. Do I think that what I think about the VIX on the daily chart, and what I said is, I would not be surprised if it's made some kind of a short-term top intraday. But I'm looking at this as the start of some kind of a corrective process. Therefore, it's in play. And if you are long, something like the TVIX or the UVXY, if you want to take a little bit off now, I don't see any reason for doing that. Otherwise, put a stop in on the day on a little bit at a lower price, like use a 120-minute chart. The VIX right now is at 1280. So maybe at about 1262, 1258, maybe you'll take a little more off or take some off. But I think that this does have some legs to the upside. It might be very choppy, and here's why. Look at the IWM. I had a bunch of questions, and a couple referred exactly to that. For instance, here, Basil, hoping you could take a look at the ETF, IWM. I'm looking to go short. However, the strength today is a little concerning. Thanks as always. Love the show, Rob. Thank you, Rob. So, yeah, look at this chart. And that's the reason why I just picked out, for my own trading purposes, I'm as a real test of technical skill, I'm using the Russell 2000 because it's been doing something. During the day, normally I would be looking at the E-mini and I say, oh, the Dow's starting to pull back. E-mini should be pulling back. They're in unison. One leads the other. Give me good clues. There's no clue whatsoever with the IWM for weeks now. It's just in its own trajectory. And here it is. After a leg D to the upside to 168.71, hitting the downtrend line, what I call the Chapman wave inside track repellent zone. Look at this. It almost hits it yesterday in leg D. This morning, it looked like, oh, fantastic. We're under the 9-period moving average. We're under the 14-period moving average. You're now looking at a peak D in the IW. Wait a minute, the day's young. It's come back. It's up 46 cents at 168.47. And what I've been saying about the IWM, and this is what I typed in, and I had a question the other day. Someone said, hey, how do you get an F in the IWM weekly chart? Someone who studied and had my courses in the Chapman wave methodology. I said, because there's an alternate count. It made a peak E at 160.63 on the week of the 26th of January with the Dow and the S&P. Then it pulls back sharply to 142.50 on the week of the 9th of February. And then it runs up. It makes a little gray peak A because it's under that previous peak E. That's at 160.30. Here it's 33 cents below the previous peak, so it doesn't get counted, counts as a gray A. And it runs up successively higher peaks all the way to the week of the 20th of June, 170.20. And now it's just gone sideways between the 9-period and 14-period moving averages as support and this upper range of the Chapman wave inside reversal area track as repellent. It hasn't pulled back. And that's the reason why I was saying that I had a whole thing to my subscribers to my opening call. And I said, we're not going to go heavy short because I need to see, for instance, I said up until 12.20, we can buy one of the big 3 times short positions only if certain things happen and only if it hits a certain level. Why? Because if we have one of those buy the dip sessions, which has been so familiar, we will see at least a couple of the indexes come off their lows and try to rally sharply. Today's the day that they're going to do that. So let me say that this now is still peak F/B in the weekly chart of the IWM Russell 2000. And the reason is that it's held beautifully. The MACD has turned down, but the price has moved up. Stochastics at 81%, turning down from the 97% area, but the price is holding well. This is going to be a big clue, and I'm going to now jump and put it together with Apple. For instance, Apple now is down 85 cents at 208.31. The more I looked at the chart, the more I concluded that I'm going to remain thinking that this is a Chapman wave leg G/B in Apple. Why? Because the MACD is holding flat at 91% in the daily chart. The MACD is still expanding, well, sort of contracting in the histogram, but the price is really doing very well. And even though it was spiked on news, it's made higher highs and higher lows on news. So this is a big clue. IWM, Apple, I'll talk about a couple of others in a moment, but these are my clue stocks to say, hey, when Apple eventually part of the Dow, part of the NDX 100, when part of the IBD, Investors Business Daily Top 50, when the Apple starts to break 203 to 202 support, that's going to be key because that'll be the first time that we're looking at Apple as being part of 2 very important indexes. And until Apple really breaks down, you've got this rotational aspect that says be very selective in your shorts because not everything is going down. As Granville would have said, 98% or 97% of stocks in a bear market go down. We're seeing a rotation. And that says that there is some kind of a rotation going on. And then good question. Oh, hi, Jason. Hey, welcome, Jason. Jason starts us off every morning at 8:30, does fabulous work. And just what a wealth of information he gives us. I mean, just the fundamentals, the technicals, beautiful. Thank you, Jason, for joining us here at TFNN. And so a question about Amazon. Amazon is looking like same thing. It's down 7 at 18.91. I've got a leg G in the Chapman wave. At G, you got to say, oh, watch out. That is really negative. But wait a minute. This could actually be a leg A, an alternate count leg A, brand new buy mode. I hate that. That's like saying, I know from my own experience over the years, I've made my biggest mistakes when I'm looking at the futures or whatever I'm trading, and I'm saying, could go up, could go down. Oh, it looks like it's going up. Oh, it looks like it's going down. Make a decision. If there's a moment of indecision, it's like in tennis. When I was playing some shots yesterday, I hit some real nice shots, and then I would hit a shot that's not even tennis 101. And you know why? Because I was totally indecisive. I didn't know whether to go left or right or top spin or left. And that's exactly the shot I got. A lousy, nebulous, dumb shot. And don't do that. This is Amazon, and all I'm saying, Amazon at 1892 needs to break 1855 to really start it down. I'll be right back. Now it's down 180.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Okay, so we're back. I need to do a bunch of things. We're having a little chat in the den, many of us, and it was a lot of fun. But anyway, so you've got Amazon, you've got Apple, you've got a couple. I mean, look at this TTD, which I had for my subscribers as a watch stock. Look at this. It takes off. We aren't in it. It takes off today. It's up 34% at 125. The Trade Desk Inc. A stock self-server ads. Companies are able to make up their own software through software. Make up their own ads. Just an incredible business. I mean, look at Roku. I had this also on the list the other day. Roku up another 3 points today. Just 3 days ago, trading at 48. So enough with that. Those are the rocket ships and we don't want to talk about that right this moment. What I want to talk about is that there is a relationship to fund managers trying to find what's working. For instance, IBB is, look at the left side chart, IBB is trading down 17 cents at 117.20. Look at that weekly chart going to a leg D. Now it's a peak D. The cup formation, I love these cup formations. It has not closed above 119.30 for 2 bars. That would be 2 weeks out of 3, but it's holding pretty darn well. This is on my list. We are so long. IBB, we've taken profits. We still have a position. And that's important to me because it's saying in this particular summer period going to early fall, you want to look at what fund managers are going to say to themselves. Hey, I don't need the stuff that's related to tariffs or whatever. Biotech seems to be kind of important. I had a good question in the den a little earlier asking, what about when the trials come out? Is there any way of telling? There's no way of telling. I said I'd also tell a quick story. I'll do the quick story right now. Years ago, I was very friendly with someone who became, it was a physician, very well-respected physician. It was invited by Washington to go there to be part of the assessing, you know, the biotechs put in whatever it is that they're trying to develop. And he was one of the top assessors of whether this would work or not. I saw him, maybe 5 years ago. I don't know, time flies, maybe 5. I don't see him very often now. I saw him about 5 years ago. We were chatting away, and he started to tell me that if these companies who are putting tens of millions, sometimes billion-dollar projects together, if they knew how to write the proposal correctly and then develop their product exactly on the specs that the proposal purports to be doing, they would pass. Almost, they'd be fulfilling exactly the requirement, and then the test, of course, itself would be subject to, pass or fail through the patient review. But basically, there are companies, and he didn't mention names, I had no idea, I just thought this was really fascinating, who said that within 5 seconds of reading the proposal, he knew that they were completely off track, that they would fail, even though they could have had a fantastic product. Isn't that incredible? What an expensive mistake these guys can make. So I'm laughing because when I used to be a full-time musician, I used to audition for orchestra, whatever it is. When I had people come in to audition for me, the moment they took out the instrument and started playing, they didn't have to play 3 notes or 4. I just knew they're either in or they're out. They're either in to be considered in, and now they've passed, within seconds, they've passed the standard, or they're out. It's this. I mean, it's simple. You got your experience. With your experience, you can tell. And that's the reason why I'm saying, look at these charts, because the charts are saying this is still a diverse market. And you've got to be careful. And that's another reason why I said to subscribers, I'm not sure if this is going to be one of those days where things come off the top so quickly that the VIX rallies so sharply that it's going to be the sell signal that just keeps going down for weeks. I think this is the start. This is the shot across the bow. But everything happened a little too quickly. We might find that there are a little couple of counter trend rallies before you get the general market trend to the downside. Okay, got enough of that. So that's IWM. I did the ones I wanted. Yes. So the answer to the question about the IWM, I would not at this particular point put it on my short list. I'd put it on my short watch list. I think there are other instruments that are much better. And I do think the Dow is telling me that the mix of the Dow, which I consider to be perfect for the first time in decades and decades, is subject to some kind of sell-off. But I love the mix for the CODA section that's coming either later this year or 2019. Watch 2019, everybody. Okay, so here we are. IWM, I'd say don't put it on your list right now. It's going to become a short a little later on. Gold. So gold, I'd said when I was interviewed by Tom yesterday, I said that gold's an interesting inflection point, but it's the dollar which for gold right now down 0.3 at 12.19. I see nothing in the weekly chart. I see nothing in the monthly chart, and that struggle in the daily chart it's kind of sad, but it's telling us something. And what is it telling us? So we went long the dollar for subscribers back on the 6th of April at 90.06. And we haven't taken anything off. We haven't added. We're long. And that's via the UUP, a horrible vehicle, but it's the best we got. Technical aspect, there's a thing called the Chapman wave stalk leg formation. Man, I'll go into it a little later. Actually, I'll show it to you now as a picture. This is the one right here in the Dow. Let me show you the monthly chart. Stalk leg formation. You see this little schematic here? There's a leg. It could be made up of many peaks, but it's basically a strong, powerful move to the upside. Then the pattern goes not rectangle. It has to be oval. And that's the body. So that's the leg of the stalk. That's the body. You know how the stalk stands on one leg. The wind blows and the storm comes and it's still standing on one leg, steady as a rock. I don't know how it does it. The other leg's tucked in. Well, what happens is the moment this oval pattern is formed and there's one penny break to the upside, it starts the neck pattern. We had that over there. And then this whole thing evolved into a Chapman wave propeller shaft formation. It's called the 1-to-1 to the upside. I don't want to get into it now, but basically we are in a huge stalk leg formation, which has within it a little kind of Adam's apple over here, and it could still go higher. So here we go. Back to whatever I was looking at. I'll have to check out the dollar. So the dollar now has just broken out to the neck in the stalk leg formation. There's the oval, not quite as long as I like it. I like it to be a little, maybe 3 bars longer. Doesn't matter. So it's in a leg F, or there's a Chapman wave instant restart. Remember a peak D? If there are 3 bars, it takes out the high. That can be a brand new buy mode. So this could be a brand new leg B in the weekly chart of the dollar. And what I said is the currencies last a long time in the whatever direction they're in, even if it's sideways. Look at that sideways action, long time. But once they start the trajectory, because it's not you, me, or Fidelity, or Vanguard, or it is countries that are putting money to work. If you look at the volume of the dollar, this is big stuff. They don't want to make a mistake. They can't afford to make a mistake. So this says we have now, at worst, raised the base of the dollar to the 95.20 to the 94.50 level, going into maybe I call it a 4 to a 6 week span. And that's really important. Why? Because if next week there is another high above this week's high, so far with this Friday, this is the last day of the week, 96.37. If next week there's an extension to this leg D in the daily, this leg F/B in the weekly chart, I can just tell you that it won't allow the gold to have anything more than a bounce. I'll be right back. Maybe I can get you some of the emails. Basil Chapman, Tiger Technicians Hour, Dow's Hour, 908, Dow, and the S&P's down 15.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. We're back. Dow's down 170, S&P's down 40. Now, you see this chart right here with the black background? This has got the Chapman wave automated resistance and support levels. So the 10-minute chart, we smashed it at 96.25, but we're right back close to it at 96.32 right now. The 120-minute chart, there is nothing here. Is this so? This is interesting. I've got a slightly different. Oh, it doesn't matter. And then the weekly chart, we just went right through 95.79, 95.56. Look at the cluster. The cluster of that's like a huge canopy at the top, and the price couldn't get through until it spirals through, rocket ships through, and that's what happened today. And the fact that it's closing, well, we haven't closed, but it's near the highs is really important. If this gave back 40 to 50, I'd say 55 to 65% of the gains, that gold would be up very nicely in a very nice counter to reality. This is saying, no, this is the correct move for now. That's the most important thing. The weekly chart has no resistance. The monthly, no resistance. The monthly chart is 97.90 as the first, and then way up at 103 to 102 to 104s is that's kind of where I would look for. But that's months. I'm not even talking now. So we'll just go one at a time. Let's go on. And we're looking at, so I've gone through a chunk of what I wanted. I've not gone to the TLT. The TLT at this particular point is trading up at 120.55, up 0.76. I thought I'd do this during the break. Let me get out of this because the Russell 2000 is still rallying quite nicely. I won't be doing trading in this particular hour. Learned a long time ago. I've got to be very careful when I get too excited and trade during the show. I just can't. I can do many things at the same time, but trading at the same time as talking and doing the charts doesn't quite work out. So let's close this workspace, and let's go to this one right here, which is the bonds. Okay, this is my 30-year yield. The white one is the TYX. The brown one is the TNX. The 10-year and the 5-year is the VX, the cyan. Come on. Should be coming up any second right now. Let's see where these guys are. They were in the trading range, and that's really key to me. This trading range, look, there it is. And I'm looking at this and I'm suggesting, I said this weeks and weeks ago, months ago, that when we made that peak D top in the weekly chart of the TYX, it was a peak F in the brown and the TNX, and it was a peak G, unusual G, in the 5-year. I said, watch out, we're going to form some kind of a pullback, and then we could go into a trading range until the range gets broken. And in this case, I'm going to do it just off the top of my head, until the 30-year trading right now at 3.37 takes out key support, start trading at about the 2.91, 29.10-ish area. that would be a big thing, because that's going to suggest that the market has probably pulled back. The Dow's probably pulled back 700 to 1,000 points from where we are, and the S&P is pulled back, equivalent, etc. But so far, it's still stuck in a range. And that to me is important. What is even more important, if you look at the iShares of the Global Timber and Forestry ETF, this is what I show my subscribers to my opening call every weekend. We look at wood trading at 75.15, down 64 cents. Look, it made that peak. I love this chart. I've spoken about it forever, that you got a wiggle. It's like a worm climbing up the branch of a tree. And then finally it breaks down. And when it breaks down, it takes out lots and lots of bars on the left. And then you got to look at, and the 200-period moving average is just a little below. It's trading at 75.16 right now, but it hit 83.88. Now, when I put this together, wood, the Global Timber and Forestry ETF, together with high-grade copper, which I forgot to look at, I'm saying I would not be surprised if there's some kind of a slowdown that's underway right now. If you look at the Philadelphia Housing Index, look at this, 369.15 peak F, just like the wood made peak F back on the 9th of June. This made it the week of the 26th of January with the Dow and the S&P. And look at this, 369 to 302. Don't tell me 70 points in a $369 ETF isn't a lot of points. You got 20% there. This is telling me be very careful. But if rates start to pull back, we'll watch this very closely. All right, enough with that. High-grade copper, as I'm going into this, high-grade copper, down again today. It's just stuck in the low range. Lousy monthly chart. I would say, no, it's a horrible monthly chart. It's kind of a pathetic weekly chart. The daily chart is not bad, but at the lower end of the range. Other than that, I haven't got an opinion on this. Now, let's go to EUR. There's no real need to go to the EUR. Look at this horrible chart. I'd spoken about this before. I said that the pattern in the weekly chart is not good, that if the EUR takes out the low of back in June of 1.15, somewhere around there, it's really very negative. This is just not good. If you look at the USD JPY, and this is fascinating to me. Why? Because this index for a while was moving in sync, in direction, not price, but in direction with the dollar. Now it's fading. It's down 40 cents, made a peak F top in the Chapman Wave back in the 113s in July. This is not good at 110. This is the reason why I think you've got this real big shakiness in the market. Now I'm going to go to some quick questions. The VIX, what's the question? The VIX to hit 40 by the 19th of September is a question. I hope it's a question, because that's a statement. I'm going to say, gee, great. You are the guru. Okay, we've gone to a leg G right here in the daily. It's trading at 12.69. Okay, here we go. In a bear phase, what you need to see is not just a day, but you need to see a week, where most days the S&P futures open double-digit down 12 to 15 points. They try to rally, and intraday they bounce, but they close at the low of the day. The VIX index starts heading towards the teens. We're only at 12.69. We haven't even gone back to 13 yet. Look at the monthly chart, a weekly chart. I said this particular pattern suggests to me that last week I said they'd be real close to some kind of a bounce. I almost went long today. Yesterday when I did my update, I was going to go long the UVXY. We've switched from the TVIX to the UVXY, but I felt just a little cautious there. It was silly because we're already looking at the short side. Okay, so the VIX index right now, if you have a bear phase, what you want to see is the Dow triple-digit down on at least 2 or 3 times during a week with lower lows and lower highs, and the week closes lower. And then the next week closes lower. That's a bear phase, not 1 or 2 days where a tweet goes out and the market gets carried away. You want this, and then you need a headline news. You need a cover story for the negativity. I usually say, don't listen to the news, just look at the charts. But for a bear phase, you have to have constant. There's just a word that comes up, tariffs. It comes up, Turkey, whatever. Oh, 2 T's, Turkey and tariffs. But you need something more. You need it to be. I don't have time to go into it now because I study media very, very closely. And what you need to have is where the layperson eventually says, oh my God, tariffs. They've never, you remember when people were talking in 2000 the layperson, your grandmother was saying, the NAS, they were talking about the Qs. No, they're talking about the over-the-counter stocks, like it was their best friend, the NAS. And then the NAS turned out to smack them right on the nose. So people who talk about this, as it gets to the public and people talk more and more about it, you hear more and people at the tennis courts. I haven't even heard anyone talking about the market, stock market, let alone tariffs. When I hear that talk, that'll say that particular issue is gone for now. So in the teens, the VIX is important.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, everyone. Don't forget, Steve Rhodes comes on, Dave White, Tom O'Brien, and I believe Dave should be interviewed by Tom, so they'll have an hour together. Okay, there are a lot of questions. Let me just do this. The most important aspect that I'm looking at now, you know how they've been talking about retail, the end of retail, the end of retail. The market vectors retail ETF is at an all-time high. Well, it missed it by a few cents today. Yesterday it was the all-time high of 106. Oh, missed a round number by 10 cents. No, it had an open round number. Oh, I love round numbers. It opens at 106, goes to 106.10, trading right now, having dipped under to 105.40 area. It's at 105.82, still holding beautifully, just down 2 cents. That's retail. That's where people put their money. That's your day-to-day life. They're not looking at Triple M or United Technologies. They're not looking at Bitcoin. Maybe they are looking at Bitcoin, but they're putting money to work, and that's really important. Leg D well above the 103.87 February high at a peak F, pulls back. It has a brand new ABC leg D. This is to me says be careful. This is a rotational market. It's a rotational correction. You're in the right thing on the short side, fantastic. You're in the wrong thing on the short side, it can be murder. Same thing on the long side. If you're in the wrong thing and it's going down, say to yourself, this is a stock or an ETF that's not participating on the upside the way I thought. It's participating on the downside. So just look at the trend. Oh, I should show that. Maybe I'll remember by Monday to show that for my CD introducing the Chapman Wave methodology, that beautiful thing where it shows the price moving up and the arrow is moving down. And the price is moving down, the arrow is moving up. Trading in the wrong direction can be very expensive. So EEM, a real quick question about EEM, and then we got to wrap up, I'm sure. Yep, down 97. Be careful. Look at the FXI. I spoke about this. Someone wanted to know, should we go long the FXI? I said, don't touch anything that has to do with what the war that's going on now, the tariff war, and that's China. Be real careful. All right, so that's that. And I think I'm going to just wrap it up by saying, check out my opening calls. My daily newsletter actually comes out every single day, Saturday, Sunday, Wednesday. So check it out. We've had some real nice positions, had a couple of misses the last week. We're back on track. So have a wonderful weekend. Stay tuned for Steve, and I will see you Monday.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.